Welcome back, ladies and gentlemen, to the Stock Market Show. Today I'm going to go over some ETFs and stocks that you should buy if you want to play it safe. We have an incoming bull market. I'm sounding the alarm. The bull market is almost here. We're not quite there yet. I can't call it that yet until we get that crossover on the monthly time frame. When that crossover happens on the MACD, that's when we know we're in a bull market. Nvidia stock, last time I got a crossover, look what happened. Boom. This is the monthly time frame, by the way. So that's what we're waiting for. Until that happens, I cannot say that this is a bull run. I just can't. Can't call it that until we get that crossover. So you still have a chance right now to buy nice and cheap. Now, the stocks that I would want to, the stocks that I wish you would buy are stocks that are safer. A lot of you have shown me your portfolios, and I'm like, oh, like some of you have nothing safe in your portfolios. It's nothing but risky stock. And when I saw that, I was like, whoa. It's like too many people. Their portfolios are like the riskiest bets ever. No safe stock. It's like if like they're just buying companies that aren't even, they don't even have revenues or anything going for it. It's just pure speculative plays. Nothing safe. You want to know how many people I've seen have actually hold an ETF? Zero. Everyone's just holding mainly AI and tech stocks and robotic stocks, like a little riskier side of the markets, especially with those, because if it doesn't work out, or if their competitor is just better, those companies just fall off the wayside. Not that competition isn't good. Obviously, you can have your Pepsi and your Coke. I think I'm drinking a Powerade right now. What is this? Powerade, is that made from Pepsi or Coke? I don't know who it's made from. But yeah, so the stocks that I want you to buy, add some safe ones, because some of you just have no safe ones, like at all. And I'm just like, whoa. Like I was flabbergasted. I'm like, whoa, like man, like not even one safe stock? Sheesh. At least have one in there. So let's see. Nvidia. If you want maximum return, Nvidia. Last time it crossed over in the monthly, it went from a low of not one. What am I saying? It went from a low to a high here of 731%. Now, if you sell when it crosses over in the monthly, then obviously, because we're not going to time the bottom, you're just capturing a portion of that big move. You would have made, let's see, it crossed under right. Did it cross under right there? No. It crossed under here. So yeah, you would have made about 467%. Assuming you buy on the crossover and then you sell on the cross under, which would be a pretty good signal. You're capturing a portion of it. You're not going to capture, you're not going to time the absolute bottom, just like you're not going to time the absolute top. So Nvidia, I would say buy and hold for 300 to 400%. Oh, you guys think I'm joking, right? You're probably laughing like, bro, are you high? No. Look at this. Another crossover. What happened? Let's see. Ooh, and then it crossed under over here, right? Ooh, oh, you would have made about 300%. So this one has a history of pretty decent returns on those crossovers and cross-unders. So I would shoot for 300 to 400% return. So at whatever, buy a bunch and then just set a take profit at 300%. And just be content with that. I know some of you are going to be like, well, I kind of want 500%. No. We're just following the strat. Or you can just wait for the crossover, and then when it crosses under, take profit. Like as soon as you see the cross under, you're like, yep, I'm going to take profit here. And then we'll buy when it crosses over again, and just abuse this longer term pattern. So Nvidia is number one on my list here of stocks to buy if you want to make easy money holding for like a year or two. And you can make some pretty good returns, as I just showed you. So Nvidia is number one here. Number two is the MAGS. This one holds the Magnificent Seven. It holds Tesla, Apple. It has all the good ones in here. And the last time it crossed over, went from, you would have made about 80% gains. And it hasn't crossed over yet, but when it does cross over, if we assume another 80% gains minimum, let's see, this should go, oh, come on, okay. This should go, according to this, to about 80 bucks. Or, again, you can just buy on the crossover, and then when it crosses under, take profit. It's another safe one that just continues to go higher on the yearly chart. Mainly because the holdings are stocks that just continue to do what Nvidia does, which is just keeps going up on the yearly chart. So a lot of these are just very safe because you have that safety net of it just keeps going up on the yearly. So Nvidia, if you want to buy an ETF, then go with MAGS. If you just don't want that single stock exposure and you just want a basket of good stocks, then MAGS is the way to go. Arguably, if you want Bitcoin exposure, I do believe this will go to 150K plus. So again, on the monthly chart, what do we see? Crossover, and it just pumped huge from a low of 38 to a high of 108. I can't believe what's going to happen when it, well, guess what? You know what's funny is this one has, it never crossed under. That's a lot of strength. Let's look at Bitcoin because this one just follows Bitcoin. So Bitcoin, the last time it crossed over on the monthly, 29,267 to a high of 109K, and it never crossed under. So this one's a little riskier out of all them, technically speaking, because it's just Bitcoin. But I know some of you love Bitcoin, so if you don't care about stocks or any of that and you just want the Bitcoin exposure, it's a pretty good one too. It just keeps going up on the yearly, and it has done so for over a decade. So Bitcoin is the way to go if you want something a little riskier, but that has that same pattern of it just keeps going up. Okay, I think that's it. I'm trying to see if there's one more. Is there one more? I feel like I'm missing one. I'm looking through my watch list. I'm going with what's safest, but I just wanted to throw the riskier one in there, which is Bitcoin. But if you believe in it, then you're fine. I believe in it. I don't think it's going anywhere but up in terms of Bitcoin. You can also buy QQQ. QQQ, I think that's the last one here, because that one returns more gains compared to VU, SPY, and the other ETFs. Let me just check the quantum ETF real quick. So it crossed over here, and it gave a return of 100%. So if you believe in the quantum side of things, if you want exposure to quantum without having to buy, individual stocks, well, yeah, you would just have to buy and hope it goes to like 160. I don't know about this one. It's one of the riskier ones along with Bitcoin. Because you're really betting on the quantum side of things. So, but if you want that, if you believe in quantum, this is the one to buy. I think it has like Rigetti and IonQ as its holdings and a bunch of other ones. So, and it just keeps going up on the yearly, like Bitcoin and Nvidia. So it's not a bad bet if you want that quantum exposure. Maybe quantum takes off, and this thing, of course, will take off with it and go like 500 a piece. You never know. But QQQ is the next one. So quantum, the QTUM ETF, that's for the quantum lovers up there. If you want that quantum exposure, QQQ, every crossover to cross under on the monthly has led to about 50% gains. I even marked it already. So crossover on the monthly happened here, crossed under here, 50%, 54%, and then 47% on this one. So about not every year, but every crossover and cross under, which can take out a year or two to play out, you can make about 50% on this one. I know it's a $514 stock, but we don't care about that. We care about how much is it going to make us once we take profit at that cross under. If it's 50%, if it's this, if it's this consistent, why not? So this one's probably one of the safer ones compared to the other, the quantum ETF and and Bitcoin. And you can make 50%. So that's not bad. 50% is 50% for playing it safe. Again, on the yearly chart, it just keeps going up. So that's what I would recommend for people who want to play it safe. Like add something safe. You don't have to add all of these, but choose one and just have that safety net of, hey, at least my whole portfolio isn't just risky bets. At least there's one that's a good one. If you ask me what I would recommend, I would just go with, I would go with MAGS because MAGS gives you that exposure to. Let me check. I keep forgetting what the holdings are for MAGS. Yeah, so MAGS, the ETF here, gives you exposure to Microsoft, Tesla, Nvidia, Amazon, Alphabet, Apple, and of course Meta platforms. So you get exposure to all that without having to buy each one individually. And if one of them, takes a dump and just goes to hell for some reason, well, guess what? The other ones are there to hold it up. So it's, if I had to recommend one, MAGS. It keeps going up on the yearly. Every cross under on the monthly has been money. And it's about to cross over very soon. And when it does, it's going to start doing this. It's just going to start running away from you. So you still have opportunity here to buy. If you have 10K, hypothetically, I would say, since we're aiming for $100, since we're aiming for 100% return, that's really what I want you to aim for. Because from low to high, 24 to 58, that's 100%, a little over 100%. So I would aim for 100% return. I would aim for about $100 with this one. It's going to be a while. Like, it takes like a couple years, like 1 to 2 years for that to happen. But hey, 1 or 2 years for playing it safe on something that just keeps going up and that gives you exposure to all those good companies, well, without having to pick individual stocks, I think it's one hell of a bargain. So if I had 10K to start, I would go 5K into this, and then the other 5K, go right ahead and gamble it if you want. But at least hey, I can lose that other 5K and I'll still make it back on MAGS. Too many people, they do the opposite. They just go all in with 10K on one risky bet, not even multiple risky bets, all in on one stock. That's why a lot of people blow up. I've seen too many portfolios that don't have anything safe at all. I recommend MAGS. That's it for the video. But you got options. You got the quantum ETF. You got the ARKB ETF. Bitcoin lovers. You got something for everybody. So it's up to you. But some of you really do need to add at least something safe. All right, that's it. I'll see you in the next one.